more
Hi,
mutual.
guys.
How's it going?
Pleasure, pleasure. I'm
GM,
good. How are you
welcome.
guys? GM. Well, it's 1:30 a.m. here, but GM
Oh,
works
thanks
for
for
me.
coming on so late. You
No,
stay
it's
up late
fine.
typically?
My sleep schedule is founder mode sleep schedule, so like I don't really have one at this point.
Yeah,
You know how
yeah.
it is.
That's what we love to
Yeah.
hear.
Yeah, no, I guess it's bullish.
Bullish.
Founder that doesn't sleep.
Man, well, I've
Yeah.
been super curious about QTO, and it looks like a few people in this chat are. I feel like when I see QTO on Twitter, it's always met with people like, this is so awesome. They got so many buybacks, but there's no way this can be real. And like people just seem to kind of not notice about it, not realize what's going on, think it's unsustainable. Like there's a lot of questions that come with it. So today's gonna be a good conversation about what your platform does, what it offers, and then just like lots of clarity that I feel like is much needed up for the timeline right now.
Yeah. No, fair. I guess I can jump into like a high level thing and then just like you guys shoot the shit with questions and I'll just answer anything you guys have.
For sure. Yeah, for sure.
Um, High level, essentially, kind of what the tweet covered, right? I think there is, objectively speaking, like billions of dollars in this industry that people are actually like. Imagine you're a big chain link holder, for example, and you're sitting on like $30,000 of chain link. You're unless you're staking it and doing some type of restaking thing and getting yield on it, whatever. You're actually not doing anything with this bag. And for like, I guess people that are like middle wealth class, it's like they don't have extra USDT to like deposit this into hyper liquid and trade perps there because they're holding onto their Chainlink bag and their ETH bag and their Bitcoin bag, and they're like, well, now I'm kind of stuck, right? I can't go ape meme coins because I need to sell one of my bags to like go repurchase USDT to deposit for one of these exchanges and trade with. But now you can essentially that link change then lateral like coin on ETH, short ETH, short chain link your bag you want. That's kind of the TLDR of it. So we accept like collateral, and then on top of that, have price pairs to trade leverage on in the entire industry because we start listing most like other exchanges do. As for the buybacks, I think it's better for me to just answer questions you guys shoot at me, and then I just like
No, yeah. So
make it clear.
To summarize that again, basically, and how do you pronounce your name?
Joaquim, YQ, both is fine. YQ is what most people call me. Yeah,
that's the easiest. We'll do that. So YQ, yeah. But so to summarize that, basically, you're saying the moat that you guys offer is the fact that you have leverage trading on pairs that are typically not available anywhere else. And then the fact that people can use any asset in their wallet as collateral to trade against.
Correct. Perfect. Yeah.
Okay, cool. So to clarify this a little bit, if I'm trading and I throw up a Bored Ape, you were using Chainlink as an example. Let's use a Bored Ape because that's something that typically doesn't move around for a while. It's illiquid for the most part. And so if I'm trading or if I have a Bored Ape in my wallet and I want to leverage trade Bitcoin, let's say, what happens if I lose the trade and I can't repay it? Can you explain that process?
So you essentially get QTO debt, right? So say a Bored Ape, I don't know what the current price of Bored Ape, maybe you guys do, but let's say it's $100,000, right? Just to make it easy. If you draw down, let's say $20,000, you now have $20,000 worth of Quanto debt. We don't take your Bored Ape at this point. You can still make it back at some point is what we're assuming, right? But assume that $20,000 worth of Quanto at the point that you lose it. So that's, let's say currently that would be about 1.5 million QTO tokens. If QTO then 5x's, so you're like 1.5 mil tokens in debt, and the price of Quanto 5x's, which is hits 100K, now you're technically seeing 100K in debt, which is when we would take your Bored Ape and then sell it on market. And then buy back Quanto.
Okay, got you. So these people now have two options. It's either, well, I got to buy the QTO token to pay back this debt, which as you've highlighted in post will obviously, go towards buybacks, boosting the price. Or I, basically get liquidated on my Bored Ape, and then you guys are going to use 70% of that liquidation to buy back the token?
100% of that liquidation, we buy back the token. So On liquidations, we do 100% buybacks. This is where a lot of confusion is in terms of like the buybacks are not revenue, right? Like people think of it as revenue, but it's actually liquidations. For other exchanges, this is revenue, right? Like every exchange has people getting liquidated every single day, right? You trade on Bybit, you have people getting liquidated, thousands of users daily. What happens to those liquidations is Bybit usually just says, "Oh well, thanks for the money," right? In contrast, what we do with that money is just buy back the token. And in terms of the 70% thing, that's the fees. So just like on Bybit, you pay like 0.01% or 0.02% or whatever in fees for maker and taker fees, or, you know. And we, in contrast, use that to just like those fees are burnt, because otherwise, like, what are we going to do with these fees, right? Like, you pay the fees in QTO tokens, and then we're now sitting on more of our own token. We might as well just burn it and give it to the QLP stakers, just like HLP is like the liquidity provider native on the platform. So that's
Okay.
where the 70%, 30% split comes in.
Okay, and then that 30% goes to your stakers, basically, right?
Correct, to the liquidity provider essentially. So we have like HLP, you have the hyperliquid like liquidity provider, and then on Quanto you have the Quanto liquidity provider, which is essentially what makes the books on the exchange and makes the books liquid.
I see. I also saw somewhere that you guys have like a proof of reserve. You have proof of reserves. How do you, if you're burning all tokens that are used for liquidations, how are you paying out people that are profitable?
But well, we're not. Okay. Again, the fees. So the fees people pay is what we're burning 70% of, and that's completely separate from liquidations, where non-Quanto liquidations. So Quanto liquidations just go straight to the QLP, and non-Quanto liquidations we liquidate on chain, and then buy back Quanto with, and that's what pays back for the opposite side of the trade, which is then someone who won Quanto, right?
Okay,
So in
yeah.
the end, theoretically speaking, these buybacks will end up back in the exchange in the QLP, or just like traders who won. So it's not buybacks in terms of actual revenue per se. All revenue is essentially burned or provided to stakers.
I see. And can you talk about the tokenomics a little bit? I think there's like 40%, roughly 20% in the team wallet, 20% somewhere else. Can you talk about
Mm-hmm.
tokenomics?
So we have 20% in the team wallet, which is as of the launch date, 1 year cliff and then 1 year vest. So that's locked up for 1 year from about a month ago, and then after that vested for another year for 12 months. Then we have the treasury, which is for future incentives, etc. And currently we have not allocated any of that towards anything. And then we have the cold wallet, which is currently at like 14 something percent, which is where we essentially distribute towards the hot wallet to let people withdraw. And this is like, I guess, a big thing in terms of why people are confused about the token, like, or like a lot of insiders trading the token. Because if you're trading on Axiom, you look at the Quanto thing, you'll see a lot of like insider tags, because these people never bought the token, but somehow they have it. It's because obviously, like, if you make money on the exchange, you withdraw it from our hot wallet. It looks like you just got sent money, right? You just got sent Quanto and it's the team selling, and it's like, no, these are just like random traders that made money and we had to send them the money they made, which is in Quanto tokens. And they're selling it on chain.
Okay. Okay, that makes sense. That was kind of the question I had earlier, where I was saying, if someone's making money, where are you guys paying them out from? And you have the reserve for them?
Yeah, which is like the part of the reserve is actually also the buybacks, right? Because the way you think about perps, I think most people that trade perps understand this. There's always two people on each side of a trade. So if one person wins, another person loses, and vice versa. So if someone gets liquidated in non-Quanto collateral, so let's say someone gets liquidated for $1,000 USDC, someone else has to win $1,000 worth of Quanto, right? So we have to liquidate this $1,000 on chain to pay back this other side of the trade, which is like $1,000 worth of Quanto. So the buyback wallet ultimately is what pays people back.
Okay, yeah, that's making sense. There was also some confusion. You guys, before Quanto, were you guys OX Fun or a different product?
Correct. Theoretically, a relatively similar product. So there was a lot of FUD around Ox before I stepped into the company. Um, the company essentially went under is kind of the best way to put it. I wasn't there, and that's when I kind of was like, look, the whole thing was just mismanagement, really. It wasn't like a bad product. There was actually nothing wrong with it. It was really just like insane KOL FUD coming in, for various reasons. And that's when I was like, yo, the tech actually works, and there's like a crazy product market fit for this technology, and there's a crazy USP for it that like the entire industry could genuinely benefit from. And because of FUD, like people are essentially just like disappearing, and they're like, oh well, I'm just gonna leave it now, right? And I was quite contrary to that. I was like, look, let's fucking make it better. So I kind of bought out the firm. I took lead of it, took majority share, and from there, like it's been a few months, and we released about a month ago with a relatively like what I would consider a very much improved product and much more transparency in terms of like everything is docs. Like I just put everything out there, right? Like you can look at all the analytics, whatever you want, and all the analytics pages are going to be much more like hyper liquid in the next like month or so, where we're just going to share fucking everything, like the amount of users, like whatever you want to see. I want to showcase because I want to get as close to like hyper liquid transparency as you can possibly get, with a USP that like no other DEX or SEX has currently really provided this skill, right?
I have a quick question just on the liquidation engine. You deal with like a lot of exotic collateral, I guess you could say, in terms of like NFTs and various assets. Are you pulling in like price feeds to reference a price of those assets to understand their value? And like, how is there like a margin requirement? Like, obviously, you probably wouldn't give someone 100K of margin if their asset was only worth 100K. There's got to be some safety guards in place there to make sure there's no bad debt in the system.
Yeah, 100%. So in terms of that, you have LTV, so loan to value ratios for every asset you deposit, where like Quanto is 1, so just 100%. So for every dollar of Quanto you deposit, you get $1 worth of collateral. And then Bitcoin, etc., are either 1 or 0.95, so these major currencies. USDT also 1. And you can all see this on the home page. There's an LTV page. I'm moving that over to the analytics page like in the coming week to make it more like findable. And these a lot of these meme coins. If you're depositing like a meme coin at 20 mil market cap as collateral, then we're taking like a pretty low LTV of 0.5. Where like so if you deposit $1,000, you're only getting $500 worth of collateral to actually play with. That of course gives us like, let's say you get liquidated, it gives us like the margin of error in terms of you get licked on it. We liquidated, but price already dropped 50% since before we liquidate like that position. Then we're not like, we don't accumulate bad debt, exactly to your point. So that's our margin of error essentially. Like for these meme coins, it's much bigger, and for like all these altcoins, it's very, very high. Like even meme coins like Trolls, I think 0.9. So like the higher market cap goes, we automatically increase that LTV ratio.
Sorry, where did you say on your site that was? It was just
that would just be if you just go to quanto.trade. It will just be on the homepage when you scroll down.
Okay.
There's a deposit.
If you want to share your screen too, you can.
Yeah, I'd love to actually just show people this too.
Yeah, no, ship it, please.
Okay. Oh yeah, right here. Okay, this is cool. This is. Well, I've been in the perp deck space. I've worked for a couple projects in early day on-chain perp dexes, but I've never seen a mechanism like this. This is really interesting.
That's a lot of assets. I haven't scrolled through this in a hot minute. I just list things as collateral and just like ship it. But I'm looking at it. It's quite a lot of like assets you can deposit.
So YQ, what are you shorting? What are you longing?
Currently, you're my market view.
Yeah, let us know.
Okay, I'm not gonna lie to you. I went giga super short, and I have the P&L card. It's like 1,000%. I went short Sol and ETH yesterday morning, I think, for my time morning. I did close out those positions because they were on 200x leverage. So I did close them out. And I was also short hype. That was my mistake. I shorted hype, and that shit just fucking ripped. So I made it, in the end I was good. But I shorted hype just thinking like this shit's still like up a lot while the rest of the market's down and it's gonna catch up. I was completely wrong on that thesis. maybe I'm just like, I'm not trying to PvP Jeff and Hyperliquid, don't get me wrong. Or maybe it was some
Yeah.
type of, I don't know. Maybe I was just hating for no reason, to be honest.
Building the narrative.
No reason.
Short
Yeah,
Hyperliquid,
yeah.
long QTO.
Yeah, see, that was kind of the game plan, but it didn't work out perfectly. But I traded all on Quanto, actually.
Nice.
I did have one. I like, I love Hyperliquid. I fucking trade on there every day as well.
So what are your user metrics looking like right now? Like, are you just kind of like steadily holding a core base of users? Are you growing each day? Like, what's the market reception for what you're building right now?
Very good question. I think in terms of the user base growth, it's not like insanely growing. And admittedly, that's because like this first month, like we literally released, I think now it's about perfectly a month ago, maybe a bit more, like 37 days. I was very much focused on like getting the product to a place where like everyone is happy with it. There's no like tiny bugs that are super annoying. There's no like also clarification of how the mechanisms work. Shipping more informative things, like improving the docs, like all this shit was just like, before I wanted to start any marketing really, I was like, let me get to a point where I'm like, there's 0% chance, not 0%, but there's a lower chance that people are like giga confused when they log on, right? So in terms of user metrics, we've slowly grown, especially like we had some insanely, like the launch days where like thousands of people logged on and checked out the platform. But in terms of user growth, generally, we're currently like, as you can see, I think by the chart, right? A large part of this flywheel mechanism is essentially these users. So if the chart starts going up a lot, you're gonna like by default be able to tell like, okay, I think that means like the users are growing. But we've been flying under the radar really, and on purpose so, because I didn't want to get to this point where like all these people start onboarding and then there's some, you know, minor thing I'm unaware of. So I'm just sitting here half the day, like shipping $1 million in and out of my own charts to like see if there's some like scalping issue or some like minor thing that I haven't noticed, or, you know. So yeah, I sit on this exchange all day, to be honest. I have 3 screens usually, not at home, but in the office, and I sit here and I just like test everything.
Gotcha.
Josh, somewhere you can see too the volume. I think I saw you guys did 1.5 billion in volume during the Yeezy, or when was it? During Bitcoin all-time high or ETH all-time high. I think you guys did 1.5 billion in volume or something.
I think what occurred there, which was one of those bugs, the volume was being gathered by the, which you can see is repaired now. The data and it was gathering data from the QLP, which was like trading against itself for a second, which is not like bearish. Like most exchanges have this where the market makers trade against themselves, but since ours is automated, it like gathered the data from the automatic market maker doing like tiny wash trades, and that ended up like at 1 billion. I think the day was like, you can see was like 70 mil, I think that day. I think that's the same day.
Josh, you want to scroll up and show that? Okay, yeah.
I believe so, or it was one of these previous days where it was like 30 mil. I'm not sure like what date you're talking about exactly, but there was 2 dates which were wrong. They were high volume days, but they were just like, the QLP was like tweaking itself, which is fine because it doesn't pay fees. Like if you're in the QLP, you don't pay fees for these trades, so it's all fine. But it was like essentially gathering data from the wrong location during those days.
Yeah, for anyone listening, the high mark on July 25th is 71.5 mil, and then you have some high marks 36, 41. So pretty solid.
Yeah.
So
what's up?
Go ahead, Dom. Go ahead, Dom.
I was gonna say, YQ. You said you bought this firm out and you've been kind of taking it over here. What were you doing before this that gave you kind of like the credence expertise to kind of just move in this direction?
I've been a perps trader for, I could tell you my entire backstory, to be honest, but
Please.
I started perps trading like 5 years ago. I was like, just honestly, my thesis was like, yo, let me hop into crypto, dog. Like, this seems like easy money. This was like pretty bull market 2020, like, you know? So I was like, this is going to be the easiest fucking money of my life. Like, let's go, right? So I hopped in this bitch, and I kind of lost a lot of fucking shit ton of money the first like year. And then I was like, okay, I don't care this crypto shit anymore. Like, I'm just going to make it back. And once I make it back, I'm fucking out. right? Like I'm just done with this crypto shit. I'm gonna find a normie ass job. I don't care what I do, but it's not gonna be this. It took me another like 6 months or something to make it back. But by that point, I've been in a year and a half, and I was like actually consistently making money, right? It was like down only, and then once it started coming up, I was like, what the fuck? This is like, it was like flywheel mode, kind of, but not really. But like I started making money consistently, and at that point, I was like, yo, I enjoy this trading shit. So I just kept trading. And then I was like, okay, let me do some CT shit, like hop on crypto, Twitter, and just like shit post a bit. I started getting into like DeFi circles and on-chain analysis, which was very big at the time with like Will Clemente and like Dylan Leclerc and these guys. Nice. So I was posting with them a lot, and like I met them at a conference, and from there I was like, oh shit, like let me start writing long form articles. So I wrote articles for about a year on my own like website, where I got like 3,000 like newsletter subscribers. It's still live. I haven't posted in a long time, but I had 3,000 newsletter subscribers there, and I was just posting like macro analysis, like chart analysis, newsletters, like theses on things or coin theses. And on Twitter, I was posting like long form DeFi threads. And so I essentially tapped into like every sphere of crypto, and I just stayed trading perps. From there, I got a few research roles at a few VCs and different firms. Then I worked for a VC for like a year and a half as head of research and head of growth. Then I quit that, and that's when I was like, what am I going to do next? And at the time, like my friend worked at Ox, and I was just helping them like with some ideas, like, oh, you guys should add like a take profit stop loss feature like this and whatnot. Wasn't too involved at all. I was just like doing my thing, trading perps and trading meme coins. And then the whole Ox FUD thing happened, and they got like not zeroed out, but like, you know, a bunch of things went wrong. Let's put it that way. And then I was like, the opportunity just arose, and I was like, bro, I think this is like insanely good tech. Like I've been trading perps for 5 years. I see the USP here, and like ship it. Like why not just like, you know, I'd accumulated a lot of Ox at this time. Like I'd just been bidding the chart the whole time. So I was already holding a lot. And then I was like, why not just like fucking go all in on something and like build something great for like the next few years, hopefully.
So when you did take over, how much of the team stayed? How much of the team left? How much, like, what did the transition look like? Whole new rails?
A big part of the transition was firing people. There was an element of like, you know what I mean? Just being like cutting like people that weren't necessary, like decreasing burn rate, making the company like super lean and super efficient. The majority of people left. You know, I don't speak to most of the old team whatsoever. They've moved on to different things. And I hired a new team. I think some of the devs were pretty like, they stayed around because they're obviously like, you know, they were good devs that just, I think, why not just keep them? So the dev team is like relatively the same. I hired new devs. Some of them are gone. But generally, like most of the leadership team is like, it's gone. Like it's just me, really.
Yeah, I got you. Cool. Let's see. Oh yeah, so let's talk about these burns, man, because that's been like clearly the thing that's got everyone in a chokehold here. 2 million in burns in the first 14 days. How many burns have you guys done to date? What's been burned? Tell us about that.
2 million. Again, the buybacks and burns are two different things.
Okay, yeah, right.
2 million. I guess 2 million buybacks. Like I think Hyperliquid buys back and then burns, if I'm not mistaken on that, which is where like a lot of people, when you say buybacks, they assume like he's buying back and he's burning it all, right? Mm-hmm. Then we would have burnt like fucking 15-20% of supply by now. I wish that was true. I think we're sitting near 2% in about a month, which is not bad. I think we burnt another 0.12 or 13% as of yesterday. So we're consistently burning like somewhere between, I think the first week was honestly the biggest week. We burned like 0.6%. And from then on, it was like 0.2 to, or like 0.1 to 0.3%, somewhere there for the last like 3 weeks. Out of dollar value of that, I wouldn't know, 1%. So it must be like near 200K that we've burnt at this point.
Gotcha.
but you can see there, so 1.62 or 63%. So that's, you can convert like 16 mil Quanto. There's 1 billion circulating. So it's about 1.6% that we've burned so far.
But of the circulating, it's like even higher. So you're like around three point something.
Correct. Yeah, because the treasury, if you like remove the treasury and team, then indeed, yeah.
So market cap's really 60% of what it's displaying on Deck Screener then. So it's not actually 12.5 mil right now. It's more like, I don't know, 8, right? Something like that. I don't know.
Yeah.
Circulating. Yeah.
Yeah.
All right. Interesting. One thing that you said earlier that kind of caught my attention, and I think it's something people should focus on. It's got nothing to do with QTO, but how would you say, like, how important do you think it is to build out a Twitter presence and just kind of like you started doing long form content, you built out a newsletter, and that kind of, got you opportunities working with VCs. And, I just saw recently John Wayne got picked up by Kalshi to head up their crypto division. How important do you think it is to building that presence on Twitter?
I would say to literally anyone. I didn't do it for like that reason per se. I just thought it was like, why not? But if you are trying to like get anywhere in crypto, it's pretty fucking necessary. It's very, 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 very difficult to be noticed if you're like not doing this. You could be a Telegram guy and like somehow get connected. People are like, this guy's a fucking super genius, right? If you're super smart and like people can tell, you can get picked up by some dude in a Telegram group, or I started in Telegram groups on like my perp side. But I think that like just ship it, really. Why the fuck not, right? Like I think it's extremely important. Like a lot of my friends that are being picked up by VCs or research firms or these things are like, they just made a few good threads and then you get into conversation or you get added to some group chat where they're just like, hey man, you're pretty smart. What's up? And then from there, like it's kind of the narrative or the story kind of writes itself. I highly recommend it.
Is QTO hiring right now? Are they looking for anyone?
I posted this actually on my account. We've been looking for like an insane like founder level marketer, just like someone who can just ship like crazy marketing ideas. Cause like I could, but I'm pretty fucking busy as it stands.
Right.
So that's one thing. We're always looking for insanely cracked devs. Like if someone's like an insanely fucking cracked dev, then I am like open to conversation, right? And the upside is, like we have like I'm not gonna drop names until like they come out and like, publicly show, etc. But our investor list is pretty insane. Some have already been leaked of the people that are big holders.
Well, you got Suzu on there, right?
There's a few that have already been posted about, like Sue, GCR, Machi Big Brother, and then there's a lot of actual VC firms that are pretty well known that are also already in the token.
And were they carryovers from the previous entity that just kind of saw through the journey? I mean, obviously they're committed. They want to see upside and they want to see you do well as well.
Correct. Yeah.
Yeah.
And some of them like have like, bought more or like invested more since I took over the firm. So yeah, that's the TLDR of that side of it. Like, I think you'll see on the timeline soon enough who these people are. But in terms of marketing, like we haven't really done anything like yet. Like we're slowly starting up, and I think at some point like we'll take the world by storm and everyone's like, what the fuck? How did this, like how did this just sit at 30 mil? We had such an opportunity. And it's like, yeah, well, that's my bad. I should have marketed it earlier.
Well, we had a conversation with Mercy the other day. He's someone we're very close with, and he was saying like there's a lot of power in that whisper marketing where it's not necessarily super broad, super mainstream, but like there are groups picking it up, getting involved, and then again when it's this kind of whisper marketing, it's like the groups that are getting involved are much more influential and powerful typically than what crypto Twitter is going to do or something. So maybe we're seeing some signs of that with it. Sounds like what you're saying with QTO, so it's pretty cool. Chill, I'll let you go ahead though.
Yeah, no, I know you said that you're kind of trying to keep things quiet for now as you're fixing bugs and you're fixing different things with the platform. Like when do you see you guys kind of going full force from in terms of like trying to grow users and like really turning on the marketing engine?
I don't want to put a very rigid timeline on it. Um, I guess like if you own any company, it's like it's always a like a slow process of like doing, not slow per se, but it's like an ongoing process to do the marketing, to ship like new product features or fixes or whatever it may be. But I think it's very soon. I think we're getting to a point now where there's a few things that I want to see added and see done in like the next month, but we're practically there. We're doing like a whitelist giveaway with Anoma, which is like a new chain for their like flagship NFT, which is like a big user onboarding thing, which we've seen a lot of traction on. So we're slowly shipping like marketing ideas, and we're coming with a like big competition where like, well, the spec of which you'll see soon, but like a big trading competition for like anybody can join. So like the marketing is coming. It's very, very, very soon, where we're just gonna go much bigger marketing than like what we've been doing now, which is pretty like low key, almost no marketing at this point, to be honest. Like a few threads here and there where I'm just like trying to raise some awareness, and Dom is a fucking legend, so he picked it up.
Appreciate you. No, and
Nice.
I gotta ask though, what's your like target demographic? Are you looking to cut out a piece of Hyperliquid's user base and convert them to Quanto traders, or like who are you going after?
Honestly, that's the kind of the best part. At this point, we don't have to compete with Hyperliquid, because like whoever has like USDC.arb, right, which is Arbitrum USDC, deposit on Hyperliquid, doesn't need to take it out to trade on Quanto, right? Like the whole USP is the fact that they're sitting on bags anyways. Like that can't be used on Hyperliquid, that can't be used on Binance, Bybit, Mexi. You just name the exchange, it can't be used there, right? So they're just sitting on these bags anyway. So there is no competitor at this point where I'm like, oh, I'm trying to steal Hyperliquid's market share, or like this DEX or this SEX, because like they just do not have what we have.
You're completely different.
Like they can trade on
different.
Hyperliquid. They can trade on Hyperliquid, and they can still trade on Quanto at the same time because that capital is untapped.
Yeah, the capital they'd be using on Hyperliquid is completely different than the capital they'd be using on Quanto, right? Now, don't get me wrong, you could deposit USDC ARB on Quanto if you'd like to. Like we have Hyperliquid like builder code on Quanto as USDC perps if you look in the navigation bar, which is just Hyperliquid perps. So you can deposit USDC ARB into that account and then trade. Hyperliquid, we have like, I think the only exchange that has zero like fees on Hyperliquid builder code. So we don't actually collect any fees on that. Or like Axiom, all these guys. I love Axiom, by the way. Great guys, love those guys. But they all charge a fee on top of it on their builder codes. We're like, well, if people want to trade USDC perps, we'll just like let them trade a Hyperliquid on our platform, right? Like I don't see the point in collecting like some fees on that.
Now, you mentioned Axiom, and I think about Axiom, and I know they have a perps mechanism on there too, and that's trading via Hyperliquid. Are there deals you're looking at, something like that, like maybe Photon can have your perps on there, or projects like that? Have you been looking into that?
I've been speaking to a lot of people about that. I don't want to disclose who or how close we are to like closing something on that, but there's a lot of conversation going on regarding that. Especially in the meme coin space. I think that like obviously there's an insane USP for meme coin traders because we just list shit early. So it very much makes sense to have someone like Hyperliquid or Photon or one of these like spot trading terminals to have a perps feature where you can actually trade the same meme coins they'd be trading on spot anyways. So yeah, very much like something we have been exploring as of quite recently, but like the conversations are happening, and maybe you'll see it soon. I can't confirm or deny quite yet, but
that sounds like it'll be big for like user acquisition. It sounds awesome.
Absolutely.
I'd be interested to know if you had these metrics. A majority of people, you're listing these memes, are majority of people longing or shorting memes when they have these opportunities?
Shorting, 100%.
Short.
Yeah. I think it makes sense. Like there's one place you can short it, and like there's every trading terminal ever you can buy it on, right? So like it's pretty rare to see like a hyper sigma bull who's like, yo, I'm gonna fucking giga long like my own coin. or like not my own, but like the coin I already have on spot as well, and just like have more long exposure. There is of course people who short long it, but when you look at like the flows on Quanto, on Yeezy or something, you'll see that like most people obviously shorted it, and that counts for most things. Like generally, there's always like a top at some point on these meme coins, and it's pretty easy to catch, which is like, I'm not gonna snitch, but like it's a pretty fucking insane way to make money.
Well, so it seems like you guys have a lot of value in listing these meme coins early. Um, has that been a big driving factor of just onboarding the users? Do you think it's that those early listings, getting things listed on perps that most people don't already have? Is that like one of your biggest moats?
I think it is a massive moat because there's so many exchanges that have been wanting to do this. And again, I don't want to shit on any other exchanges, but there is like Ourbit, etc., that like they want to list very early, but I think infrastructurally it's kind of difficult on USDC perps to list things like pretty early. So for that reason, like we still list things the earliest. I think as for user acquisition by means of early listings, it is relatively small at this point, but I think that's because like the brand awareness is still relatively small, right?
Right.
Like we list things and then put a tweet out and we're like, oh, we listed this, and it will get like 100 likes from that community, but it's not like everyone is now suddenly like the whole community is like fucking long that shit, right? They just kind of like sit around, they're like, that's sick, we got listed, they retweet it, and they like go off on their jolly like
Right.
Axiom trading journey. Yeah.
Yeah, well, and so would
So
you attribute most of those listings? Chill, I'm gonna let you go. I'm sorry. Would you attribute most of these listings to you? Because it seems like you're in the trenches pretty often. Who's finding these tokens and being like, "Yo, we need these on our platform ASAP. Let's push this."
That's mainly me. We have like obviously like we have some big trenchers, not big trenchers, like big in terms of account size, but like very fucking good trenchers, like Thurston, who works with us. Like he's good. He's not very well known, but he's fucking like, I've seen this guy print like insane amount of money. So he's helping. Like, so yeah, we have a small team of like people that genuinely trench, which is part of my background, where I did perps for a long time. I traded, from I think early 2024, I started trading a lot of meme coins. So yeah, I've done like the whole shabam, and I'm still like relatively active in the trenches, like way less now than I was like 4 months ago before I took the shit over, because I'm a busy guy now. But I used to sit there like 16 hours a day and just like press Axiom buttons, or Bullx at the time. So yeah.
So on that Axiom Bullx topic, I know I'm kind of backtracking a little bit, but if we were to just kind of like go through the integration process of integrating like Quanto onto a platform like that, like is it just like a simple like API integration, or like is there like a lot of infrastructure to build to integrate something like that onto a platform like Bullx or Axiom?
Realistically, it would be the same as Hyperliquid Builder Code. Currently, our API is not, I think, developed enough. Like we haven't worked on the API enough for it to be like perfect for integration. But of course, like with the conversations that are happening, like we're working on the API to get it to the point where like that is an easy integration. But it would be the same as Hyperliquid Builder Code, essentially, where you just plug it in, you have a new front end, or the front end isn't that complicated. It's a chart and like a few buttons, and you plug and play, and it wires the transactions through us, and you trade perps.
Gotcha. Because my question is, I've seen the trading terminal trend. I caught that pretty early. I think it was 2023. I did threads and stuff like that, like you did. Still do them. But I wrote a thread about kind of trading terminals and how they're kind of unifying the trading experience, bringing all of these different elements to trading on chain into one place. And one thing I never really understood is, why aren't these terminals kind of going after the perp side of it? Like, I mean, you have everything there, right? You have like your meme scope, your trenches, like where you're seeing all the launch pads deploy. You have your wallet tracker. You can copy trade. You can, do have your watch list, have your data analytics for on-chain analysis. But like, what's stopping them from adding that one piece, which is perps? Like it's to me seems like an easy add-on if it's just a matter of API integration. Or are
I
you the
think
only
that's
one of the space like starting these conversations?
I think in terms of conversations, the in terms of trading terminals, I'm not quite sure how many of them have been interested in doing some type of perps thing. The ones I've spoken to are interested in it. Um, I know there's a lot of people trying to build something similar to what we have. They just haven't figured it out as of currently. Like, who knows? At some point. Um, as for, I guess the question broader on like why a lot of these trading terminals haven't done it, it's because it's a pretty fucking complex system to have a perps platform. Um, it's not easy at all. Like with order books, with where you get the liquidity from, like which is why the hyperliquid builder code is like very solid. And Axiom made a very good choice by like shipping their product initially and saying let's just add this hyperliquid builder code onto there and have USDC perps natively on the platform. That might be the easiest current integration until
It
Quanto
probably is
comes along.
also because it cannibalizes their spot fees. Like some of these platforms are getting almost 100 basis point fees on swaps, and then to offer perps where you're getting, you take the 5 basis points hyperliquid charges, mark it up by a few basis points there, and it's like, the model kind of cannibalizes their spot fees. But I don't know if that's true. I mean, Joachim, you might have a better.
No, it's very much true. I think that like when you look at Axiom, you can kind of, I believe you can look at their metrics. I happen to know a lot of the metrics that they have. I don't know. I just have sources. I don't know if they got it from some dashboard, but maybe there's a dashboard on this. Their hyperliquid fees that they've gotten is very, very low. So I don't think it actually competes with what they do on spot in terms of like where people would be trading, because it's just such a different ball game, right? But in terms of like the EV of having it in terms of revenue for most of these platforms is pretty low, right? It's like, what are we going to make on this? Even like hypothetically speaking, if they get X amount of users, how much are we making? Like it's generally pretty low. It's extra revenue, so I don't see why they wouldn't do it. Like we don't care for the extra revenue because we just buy back Quanto with it probably, right? So like even if we just set 0% fees on the hyperliquid builder code, which is, I think we're the only one again, but yeah. So I think that's generally why they haven't, like, actually don't know why they haven't done it, to be fair. Why, like, everyone should be doing it. I think every spot platform should be integrating either like hyperliquid builder code or very soon Quanto builder code, is my personal opinion.
Obviously, Quanto builder code.
I feel like Quanto is a natural fit, in my opinion.
That's what I would say too. But hey, I don't want to be too pushy with it, right? Like let them figure out for themselves.
So I got a forward-looking question. It feels like hyper gambling has been really popular, prediction markets. And I think it kind of all feeds into the idea of perps trading, right? You go down this risk curve of risk, and you have like spot trading, and then you have, trading like you guys do. Would you say we're just naturally headed in a direction where more people are going to be trading leverage than they are spot? And like, that's a growth you've been seeing over the industry recently? Is that like a growing sector?
I think so. I was on Thread Guy like 2 weeks ago, 3 weeks ago, something like that. I think 3-4 weeks ago. And then Kraken CEO came on like a few days after me. And then I got tagged in some clips that I don't know that somebody made of the Kraken CEO. And he essentially stated like that like 80% or 70% of all volume that happens in crypto is still like on perps, right? Which is very valid. I think in crypto, the majority of people are actually trading perps because when you look at the general wealth effect across like wealth classes, most people are still on the lower side of it. And most people are still like, they believe that like, yo, if I could make this cycle like $100 million, and I'm not going to make it by, buying $1,000 worth of, a meme coin at 10 mil, because then it has to go to like an insane valuation that no meme coin's ever been at. In contrast, people do believe that if they go 200x long on some exchange, or 100x or 50x or 20x or whatever leverage, they think they have more money than they do. So this is why I think most people still trade perps. And I think it's gonna, that trend is gonna keep going. I don't see that trend shifting in any other direction, to be honest. I think it just makes sense. It's more capital to play with that can make you very rich very quickly. And I think it has historically in crypto. Probably the richest people in crypto ever made were like GCR, fucking these other dudes. They're trading on leverage and fucking killed it, right?
This is true.
And
meme coins has been great. Don't get me wrong. There's fucking millionaires made here too.
Well, you can do both with Quanto, right? So there you go.
I fucking love Dom.
Come on. What's up, Joe?
And is Quanto? Do I have to like? Is it natively on Solana? Is it on? I haven't traded on Quanto yet, but if I were to want to, do I need to bridge some funds over? Like, what am I? Where are you guys?
Solid question. So the token is natively on Solana. So like all the wallets are natively on Solana, on Solscan. They're all tagged, etc. So in terms of like infrastructurally token side, we're fully Sol native. In terms of where like the matching engine takes place, it's technically seen off chain. I think it's just because like I think Hyperliquid was the only one that's figured out like an on chain matching like engine that actually works, which is still relatively, it's very much centralized. It's just on chain but centralized. Not shitting on a fucking insanely good platform, but so theoretically you can literally deposit anything from any chain onto the platform. You don't need to bridge funds. You don't need to do anything. You can literally just like go on the platform, press the deposit button, and then select whatever fucking asset out of fucking 400, 500 assets you can deposit as collateral and start trading.
Wow.
It's kind of nuts that no one else is doing this, right? Or at least no one else is established doing this right now outside of you guys.
I guess the reasoning behind it is because it is a very complicated product in terms of both the matching engine and the risk engine and all these things that you have to like properly monitor and have properly built. That is it's generally very difficult. And I think on top of that, you're not only doing a very difficult version of like an exchange, and an exchange is already difficult enough, right? Like you don't just build Binance in a weekend.
Sure.
And then on top of that, we're like, okay, now we're like Quanto derivatives, where you're on your native token, which is why it's called Quanto. It's a Forex term, technically seen Quanto derivatives, or Quanto perpetuals. So now it's like an extra layer of complexity, which allows us to do what we do. But then again, like I highly recommend anyone who listened to this so far, or like anyone who ever tries to trade on the platform, to like read through the docs real quick, or like shoot me a message and I'll send you a voice note if your message comes through, like how the fuck this actually works, because there is certain, it is risky, and there's like extra elements of complexity compared to perps you're usually used to, right? We're portfolio margin, so you can have a bunch of shit in your portfolio, and it's all exposed to one singular trade at a time, right? There is no isolated margin.
Sorry, sorry, if you want to finish up your thought there.
Oh, I was just saying I've never traded isolated margin a day in my life, but apparently a lot of people do. So it's just not available here.
So the payout for winning trades is in QTO, or is it in the asset that you're longing?
It's in QTO.
It's in QTO. Okay, so that kind of makes it because the early GMX model was you get paid out in the underlying asset that you're trading. So if you're short, you're getting paid out in stables, and if you're long BTC or ETH, you're paid out in BTC or ETH. So the way you've done it with QTO, I think, gives you that level of flexibility where it doesn't matter the asset that you've been brought. You can basically, or that they're long or short, you can pay it out in just like a neutral asset, which is QTO itself. Yeah,
and like you're also trading. It's a very complex thing. I can get into the technical aspect of it. And it's probably pretty important too, but I'm not sure how.
Yeah. This is a DGen trading show, so people are pretty smart on this channel.
Okay. So when you're trading, so everything on Quanto has a quantum like QTO multiplier on it. So if you long $100 worth of Bitcoin, you're actually denominated in QTO tokens. I think that makes sense. I'm using technical jargon like denomination, but in theory, this already should make sense. So essentially, you're exposed. Let's say you're using USDC as collateral and longing Bitcoin. you're exposed not only to the, well, USDC is a bad example. Let's say Sol as collateral. You're exposed to Sol price as your collateral. You're exposed to Bitcoin price as the chart you're trading, and you're exposed to the Quanto denomination relative to your Sol collateral. So if Quanto 2-3x's and Sol stays stable and your chart stays stable, if you don't have enough Sol to maintain this, like, well, that's a bad example, whatever. Essentially, your Sol and your Quanto are like fighting for price, right? So if Quanto goes up 2x, you have 2 times as much exposure to this Bitcoin long as you would have in the initial scope of your trade.
So then what's the safest way to trade without factoring in, 2-3 different assets? Would it just be straight up use the QTO token as your yeah?
That or if you're trying to have the safest way to trade, it would obviously be USDC or QTO, because then you're not then there's not one extra fluctuating asset
Metric,
class.
right?
Yeah.
Is this an under represented part of the flywheel? Because the reason why L1 tokens are valuable is because they're the underlying collateral on those chains for the most part. Do you see QTO playing that same role for Quanto? Is that people just denominate it in QTO?
In theory, like the entire platform has 2 options. You can denominate in QTO or in USDC or in USD. But the entire platform is that's why Quanto is QTO token is the core of the platform. It's not just oh, we wanted an exchange token. You know what I mean? Add it to the exchange and throw it on there and do buybacks for no reason. This thing is the entire exchange, the entire matching engine, the entire liquidation engine, everything runs around this token. If you own this token, you genuinely do own a part of this exchange, right?
And so, well, I want to get into that too. Let's talk benefits of holding the token, right? So, are there platform discounts you get for holding the token? What are some benefits to trading with the token, using the token, outside of just price appreciation and the flywheel you guys got going on?
Yeah, so obviously there's the flywheel, there's the burn. So the token is obviously decreasing in supply, blah blah blah. The more tokens you hold, so we have a point system on the platform, which is a rewards program. The more volume you do on the platform, the higher rebates and referral rate you get. And on top of that, the more Quanto you hold on the platform in terms of actual QTO tokens, you get a multiplier on this point system, right? We already have an insanely high ref rate. So we have 6 VIP levels, which go from 30% at VIP 1 to VIP 6 at 55% referral rate. And that comes, I think, with a 20% rebate rate on all trades at the highest level.
55% referrals, crazy.
Yeah, but I was, bro, this is the least Jewish. Okay, no, nothing against it. I didn't say nothing.
We know what you mean.
Yeah. We're extremely not greedy with any of this. In terms of how the token works, we actually have no actual revenue source, right? I literally have made $0 off this platform.
So that's what I'm trying to figure out. How does the team, operational costs, how are you guys getting paid? There's got to be some sort of, benefit just from holding the token.
So that's the net benefit of the team. Yeah, we just we have the token supply that unlocks in 2 years, and hopefully we run this thing up, and at some point we have unlocks. But that's really it.
This team is basically forced to be aligned for at least the next 2 years until your tokens are a minimum. Okay, I see.
Yeah. Bullish. So we're just 1 year until the cliff ends, and then we have the vested period. But yeah, the team is literally just I'm getting a call here. Okay, we're back. Apologies. The team is literally locked in. Yeah. So there is no revenue sources. We were speaking about something else a second before. I got confused because of the call. I'm sorry about that.
Yeah, no. So before we were speaking about the benefits you have for using the QTO token in app as for discounts or rebates or higher, and then you had mentioned how the team's getting paid or getting some sort of benefit from this, and you said, well, a team token. So you're aligned incentively for the next 2 years to at least build this out. What happens when you're out of those team funds? Let's say call it you set a 10-year runway to distribute these team funds slowly, or even longer than that. What happens when you're out?
In terms of
like you paid out. Okay, so you got 20% for the team set aside, right?
hmm
So let's say the cliff ends, the vesting period ends. You now have these tokens unlocked, and you start distributing to the team, the core contributors, the people that helped along the way. The 20% gets distributed over the next 10 years. What happens then? There's no incentive left for the team to continue to kind of build this out, other than just like if they still hold the tokens, price appreciation.
Yeah, but QTO's worth 10 billion at that point.
This is true.
That is very true. That's, I guess, the easiest thing to do then is, I've thought about this a few times. I think that short term, or not short term, but for the next few years, like we have so much. That's why there's a pretty big team supply bag. Like a lot of projects do 10%, 20% to the higher range. If I come from a VC background, I would have said 20% is high. If some project came to me and said we're raising and we have 20% team supply, I would have said, yo, relax. But the fact is, like, we need this runway to some degree, which is why we have such a high team allo, which could run 10 years, right? Easily, with the amount of we've distributed at this point, and I'm aiming to like distribute in the next years. We're looking very good for runway in that sense. The easiest thing to do if we ever say, oh fuck, we're running out, is to like slightly adjust some tokenomics thing where like the team can be incentivized by XYZ new thing. That wouldn't be the buybacks. That could potentially come from some type of, come out of like the burn, and you do 10% less burn or 5% less burn. And then you have, this 5% margin, 65% burn, 30% to QLP, and 5% goes to team revenue to pay out. Something that along those lines. Like at this point, like we have enough runway, and I have thought about it a few times. I'm just like, let's not worry about that now. Let's just fucking like rock this shit and run it up. We have, now 2 years to think about it.
It's a non-issue. Yeah, it's a non-issue.
Yeah.
And then, like you said, you can easily make some adjustments.
Can I ask a quick question? So I just pulled up QLP here, and just curious, the negative 69 million QTO, is that the trader net losses to QLP?
That's the opposite.
Okay.
So that's the QLP net loss to traders. So the APR is largely from like the fees and the funding rates. So the fees, 30% fees that come to if you stake in the QLP.
Yeah.
And this is actually, I don't know what the start date on this is, probably about a month ago.
Yeah. The 10th of July.
But it started at zero, or started negative because the chart. Yeah. So it already started like negative, like 4 mil or whatever, 9 mil, whatever that is.
With fees in addition. So the total with fees is 10 million QTO to the QLP. But traders, for some reason, and this happens, GMX and Hyperliquid go through these phases where traders win and then traders lose. But yeah.
Can you wait? Go ahead. Sorry, go ahead.
Yeah. So the very interesting thing about this, is I was just speaking with one of our investors about this today, and then another one 2 days ago. So we're making a few adjustments to how the QLP, like funding rates and stuff on the platform work, in relation to how Binance does it, and come closer to that in terms of funding rates to essentially incentivize the QLP further. A large part of this is like when you look at our current trader base, they're just all fucking smart money, man. Like, I'm not gonna lie to you. These guys are like printing out of their ass, right? They're all just like good traders. Like some of our top traders are like traders like GCR. Like it sounds like I'm just name dropping a name drop, but he trades on this bitch, and it's kind of annoying. Love GCR though. But so it's a lot of smart money that actually understands the concepts, and they're actually like making money on their trades. So I think that's like a large portion of why like the QLP ends up negative compared to like when you grab a more like average trading. Like if we were to onboard like another 10,000 users, you'd sit at a much more average like income rate on trades, right? Like,
yeah,
which is
and
majority
over time
losses.
this should go positive in terms of traders are losing over time to QLP. It's no different than GLP or Hyperliquid's liquidity pool. They all did the same.
Yeah, they'll go down and draw down, and then eventually you'll see like, I think that's a great dashboard on Hyperliquid actually. They have that data that says like net user P&L. Have you seen that?
Yep.
That's a hilarious chart. It's just like literally down only, like everyone's just losing on Hyperliquid. I feel like on Quanto right now, it's just like a lot of smart dudes. So that shit probably just looks like this, or like it's stable up-ish. But I think as we do marketing, like there is gonna be less like smart money that trades on the platform over time. Because like right now, it's like I've marketed to like my inner circles and investor inner circles, and these guys are obviously not like the traders that it's not an average trader. Let's put it that way.
Yeah.
Sure.
Yeah.
That makes sense. So I guess I got a question too. Then, like, after everything you said, I'm just like, who is selling? Who is selling this token right now?
P&L, right? So that's the main thing. So you get your P&L in Quanto. So you're a trader, and you make, $1,000, $2,000, $3,000, $10,000 on a trade, and there's a lot of there's up to 200x leverage available. So you can imagine, and now you're sitting on like a Quanto bag, and say you're not like you already have a Quanto bag as well, still on platform, but you want to de-risk some. So you're gonna end up like selling the token to like de-risk your, your risk to Quanto in case it goes down further. That's the major, like you can see if you go on Axiom, you can see where these transactions are coming from. I think net like 90% of sell pressure is just dudes who just withdrew. Yeah, insiders, but they're just dudes who withdrew like 10 minutes ago. And they're like, yo, I just want less. And I kind of monitor these flows pretty closely.
How do you counteract? Because I see most of these big dumps are like you said, people just flushing out of their position. How do you counteract people who go on Quanto and then, short QTO with leverage, 200x leverage, and then just dump a massive bag on the look? Okay, there's only 450K in the liquidity pool, so they, one dump would cause a couple percentage. How do you guys counteract them printing off of that and then just selling more?
Very valid question.
And a question to add on to that. Would you say this chart is simply a reflection of how much smart money is trading on your platform?
I think the smart money is very much like people we know, so they're not actually dumping as much. But I guess like the people we know that are like making a lot of P&L, they just like keep their shit. But still, this is also like a lot of these people are still like they're obviously printing, right? These traders that are ending up selling, like I speak to a lot of these traders myself, so I have pretty close connections to like most of the people that are printing on our platform. I end up establishing some type of connection with. They're pretty fucking smart guys. And in terms of, I guess what you outlined, which is Oracle manipulation, that's frankly against terms and conditions. And like they tried to do this on Hyperliquid. I don't know if you guys remember the whole jelly incident. That's Oracle manipulation. That's just not allowed on any platform. That's technically illegal and exploiting a platform. So like how we protect against that is like we have a risk team that's pretty big, a market making team that's pretty big. They're monitoring flows all day of like what account is doing what and who's withdrawing what. We've never had like a slip up where just we didn't notice somebody like exploiting us, right? It doesn't happen a lot. We don't see that shit a lot at all, to be honest.
But you do gate. You're kind of gating the withdrawals, unlike GMX, which you just sign a transaction and it pulls it out of the pool because you have the keys to it. You're saying kind of like Hyperliquid, where there's that layer of defense where it's like, okay, the trader did this, but we can claw it back. Exactly. Rightfully so, and people have changed their opinion on Hyperliquid and said, hey, that actually might be a huge benefit than just allowing GMX to get exploited.
Yeah. That's exactly it. Like, I think that it's a necessary thing. I don't want to name names, but if you look at like a lot of exchanges and their rate of rugging their users, it's pretty insane, right? And for the craziest shit, man, like I fucking frankly completely disagree with how they do this, but there's exchanges that do it pretty badly. We're just to your point, like it's a defense layer that I think is very necessary for like in the benefit of every token holder on the platform, right? Or off platforms, anyone who holds the token. Like if we just say, oh well, you guys can do whatever, then it's just like everyone's gonna dump the shit and do some Oracle manipulation because like it's possible, right? It's like free fucking money on leverage. Like, why would you not? But we have a very strong defense against that.
A
So at
mutual
this
friend
point,
of ours, Joachim, said, can suggest position limits on smaller cap coins to prevent exploiting. So I mean, there's like tons of ways that you can defend against this, but yeah.
we might have those.
Yeah, you probably do, right? So
think about it.
Yeah.
But yeah, I think that covered pretty much everything I had. I think you put a lot of clarity out that wasn't maybe there before. So super valuable to anyone that trades on your platform or is interested to just go through and listen to this. But I think the biggest takeaway for me is going to be like your move to onboarding more retail as opposed to smart money and how you can quickly scale that. And so if you want to leave this spaces here with kind of like a forward looking thought that you kind of have, I would love to just hear where you guys are headed, what your plans are, roadmap, whatever.
Before we get into the forward-looking thought, and sorry to break in, we saw kind of and I wanted to ask this because if traders, like let's say retail traders come and start losing to QLP, does that have an opposite effect on the chart where like people have to buy the QTO token to pay it back? So we've talked about how QTO is kind of maybe going down because you have smart traders on the platform. But if the opposite is true and you get to retail scale and there's a lot of people losing to QLP, they have to buy QTO back. So that adds kind of the opposite
Correct
of nature, right? I just wanted to confirm that for people watching.
Yeah, and then the QLP just starts ripping up.
Okay, cool.
Yeah.
Now you can get to
you made a good post about that actually, I think, at one point, which I might have on my screen here. Let me see.
Yeah, so I didn't mean to interrupt you there, but I just want to clarify that because we kind of talked about the net loss, but also it can go the other way too.
Okay, I think it's a bit down and get liquidated. It says it says something about debt if you go up a bit.
Okay, every losing trader has to buy back QTO right here.
Yeah.
Every winning trader doesn't want to sell QTO. On the token side, it's simply a damn buyback and burn engine. And then he kind of gets into more of the burns. So, yeah, I just thought I'd pull that up. There's a lot of, I follow your Twitter account. You put out a lot of good tweets that kind of, this is what got me interested in QTO in the first place. So if someone has questions and are interested, go to his YQ's Twitter and you can learn a lot. But that being said, back to the original question. Some forward-looking thoughts, man. What do you want to leave us with and what can we look forward to?
You can what can you look forward to? It's like I'm shipping so much shit, man. You'll see it all. I think just follow my Twitter. Like keep an eye on the Quanto Twitter. It's just Quanto QUANTO. That's just the @ I think the key takeaway here is like flywheel mode. Fuck it, let's go.
Let's go.
I don't have much else to say. Like I've explained the platform. I think like I've answered a lot of questions to Dom's point. Like I think there is a lot of gaps in understanding that of the platform and the token right now. But as time goes on, I think the mindshare increases, the platform increases, and like the user base. And as the user base increases, by default, the token price is going to go up. That's how the whole thing is designed. Like I said in that tweet, like the entire thing is just a buyback and burn engine for the token. So if you hold the token, you hold part of the exchange's success, and you'll most probably print a lot of money. I'm not going to say that it's guaranteed, but I'm pretty biased. I think it's guaranteed.
Naturally. No, you guys, do you guys have NFTs available as collateral on the platform yet, or are you working towards that?
We currently have it available. It's like it's not considered a beta. I would consider it a beta because like I know like what's come with like the improvements we're making to it. But there's like I think there is a list. I highly recommend if you hold NFTs. There's a specific list that we currently accept. If you deposit something that's not accepted on that list, like we can't hold it, which means like that shit is gonna go into the fucking abyss, right? So you have to like make sure it's on that list, and if you send it over, then it works. I'm trying to like obviously accept everything, like any Sol. Currently, it's only a certain list of ETH NFTs, but since we're Sol native, that's kind of like ETH is just much easier to integrate on this front. So yeah, we do have that as well.
The NFTs are a little tricky though, because sometimes for some of these NFTs that are dead, they're just no marginal buyers whatsoever at like any level. So it's like you can't generally use all of them, I guess. So it makes sense.
Yeah. So yeah, I think and at the high level as well, like thank you guys for having me on and like allowing me to clarify these things. And Dom, thank you for like constantly fucking supporting. I appreciate it.
Dude, of course.
Means a lot. And fucking buy Quanto, trade on there, and fucking let's make a shit ton of money. That's the game plan.
Let's do it, man. Well, then hopefully we
Love
get
it.
you back on when you guys are trading at a bill and looking back. This
For
was,
sure, for sure.
Yeah. Yeah.
I'll hop back on. It's
Perfect.
like what? It's like a month out. I don't know.
Yeah.
Okay.
We're not gonna have much to talk about because we just covered it all. Yeah.
All right. Cheers, guys. Appreciate you.
Yeah, man.
And
See you,
speak
YQ.
soon.